Hi, good week to all. This is Calvin here again. Welcome to this week's latest edition of the weekly technical outlook on the major stock indices. So, as we know that last week has been a pretty much exciting and volatile week on the global stock indices. As you all know that after the Fed FOMC slightly hawkish guidance on early Thursday Singapore time, most of the stock indices actually plummet, and especially on Friday, which actually coincide with this option expiry on the US stock market, we start to see across the board sell off. So most of us as traders right now, the big question comes to mind: Is this the start of a major risk-off event? Okay, given this the tilt of this latest Fed FOMC guidance, slightly more towards the hawkish side of the story, where some of the key Fed officials had decided to bring forward the first Fed fund interest rate hike. Initially, it was tabled in 2024 to 2023, and some even actually mentioned at least two rate hikes before the end of 2023. So before I jump into the key technical configuration that I want to share with you all going forward, at least in the medium term, with a couple of 1 to 3 weeks, where is the trend bias and the key levels to watch. Let's take a look at the disclaimer slides first. All right, so let's start. Let's look at the raw momentum stats. Okay, raw momentum stat is the measuring rate of change versus the prior week and the prior 4 week average of the various major stock indices across the group. From last week performance, 14th of June to 18th of June. So we could see the US major stock indices from the S&P, Nasdaq 100, the Dow Jones Industrial Average, all is in the red. And what surprisingly is the one that is solely in the positive figure is the Nasdaq 100. So those who actually followed me on social media, which is my Twitter account, we have already tweeted the last 2 weeks or so that say that there is going to be a potential outperformance of US tech stocks over the cyclical stocks that has been outperforming in the US market and in fact the rest of the almost globally since the start of this year, Q1 and Q2. But however, due to the yield curve has started to actually slope downwards. That means, i.e., the US 10-year Treasury yield is now actually the difference. Okay, pardon me, is the difference between the US 10-year Treasury yield and the shorter term, the 2 year, is actually getting narrower. And this observation has been picked up last 2 weeks or so in my Twitter. Actually, I tweeted over here forewarning that there's this potential, we call it underperformance of cyclical, where the Nasdaq 100, which is actually heavily weighted towards high quality tech stocks, will actually now start to take potential center stage as we go into Q3 this year. That means potentially we could see this kind of rotation play coming to play. Underperformance in cyclical, however, potential outperformance in the high quality tech stocks, which is most of the which is the US big tech that is heavily weighted in the Nasdaq 100 index. So we could see there are very clear stellar outperformance last week, despite we start to see a kind of we call it a pretty much lackluster tone or a less optimistic tone in the global stock market last week due to the Fed FOMC. So, but however, it starts to actually reduce a bit of its gains from its prior week performance at 1.65% and 1.12%. All right, so the worst hit over here was actually the Dow Jones Industrial Average, negative 3.45%. Previously, it was holding the fort pretty quite well. Its prior week was negative 0.8. Prior 4 week was about flat. So notice that there's a huge disparity between the prior week performance and its prior 4 week average, the huge difference. So all because of this cyclical underperformance that is coming in, that is unfolding right us in the market right now. All right, because as you all know that the Dow Jones Industrial Average is heavily weighted towards cyclical stocks. Okay, so also pretty much lackluster on the Russell 2000, negative 4.2% versus its prior week 2.16% performance and its prior 4 week average of 1.23%. And what's so interesting over here is we start to see some media reports saying that because given that the dollar strength starts to pick up as well, some of the Asia stock market will be badly hit, especially China-related stocks. But the numbers one is telling us as a different picture. So if you look at the Hang Seng Index towards the end of the week, right, it's actually far performed better than the S&P, or in fact, in general, the average of the the major 1, 2, 3, 4 US major stock indices, with the exception of Nasdaq 100, definitely due to its heavily concentrated weighted in the technology stocks. So almost a slightly a minor loss for the Hang Seng Tech Index, Hang Seng Index, which is negative 0.14%, almost the same as the prior week average, which is negative 0.26%, and still below its prior 4-week average of 0.73. And what's interesting over here is that the China big tech stocks, which is comprises of inside this Hang Seng Tech Index, which is it comprises of the China big tech stocks like Alibaba, Tencent, JD.com, Sunny Optical, this kind. So it's actually showing a remarkable return in the land of sea of red last week, which is 0.63%. Also above its prior week performance of negative 1.2%, and I would say that it's still below its prior 4-week average at 1.42%. So what you could see over here is that the Hang Seng Tech Index, right, after that sell off that we see in the after the sell-off that we see right after the Chinese Lunar New Year break, it now has really starts to actually consolidate in a one 1 to 2 months perspective right now, since May this year. So it really started to consolidate within a kind of a range bound configuration. But the good news over here is that at least it is not seeing it's not just singing to the tune of traditionally we start to see dollar strength, where we start to see a major sell-off in the mostly of the Asia stock indices. Yeah, Nikkei 225 almost unchanged at 0.05%. So later I'll touch more on the Nikkei 225. Why? Because interestingly, a lot of us say, hey, Kelvin, Nikkei 225 today is the worst performing Asia stock market so far, which is dropped, I think, 3% or so. Yeah, 3.3%. Yeah, negative 3.3% for the Nikkei 225. But how come you say that it's almost is actually okay in terms of the configuration? But nevertheless, because we as a trader, right, we cannot as a technical trader, we cannot just look at one particular reading for today to say that a trend change has already been taken place. We got to understand that as it start to break down various key levels, then we could be confidently say that or validate that saying that hey, there is a trend change that is into the Nikkei 225. Trend change is a major downtrend change. All right. So later I'll share you more about the Nikkei 225 chart. In CMC platform, we call it the Japan 225. So if you look at just the raw momentum statistic for last week, it's almost flat, almost unchanged. German DAX also collapsed as well because it's heavily cyclical weighted, so negative 1.56% last week, almost the unchanged mark for the prior week, and yeah, almost it was actually been sideways for the last couple of weeks. Yeah, so yesterday, last Friday, it actually plummeted due to this negative feedback loop that was seen in the US stock market. And also definitely those who want to find out why the US market faces such a huge volatility, high volatility on Friday, actually you can follow my tweet. Later I'll share with you how to actually follow me on my Twitter. I actually explain to your share the reason for your a good kind of market recap almost every day. So in fact, to keep the story short, last Friday was due to two events that causes the high volatility being seen in the US stock market. One is big option expiry across the board. That means for the option from the futures instrument, for the options instrument, option as in single stock as well as the major stock indices. Then plus you have this hawkish speech or hawkish media interview from one of the quite vocal Federal Reserve official, Bullet. Bulan. Okay, sorry the pronunciation. He actually did mention that he's one of the few hawkish camp that actually support for a faster rate hike, and he himself actually suggested that the first rate hike to come in 2022 instead of 2023. That is the current consensus right now. So that's overall give rise to that high volatile trading day on Friday in the US stock market. So it could be noise, because number one is due to the big option expiry. So what we could see, the real picture, it should be start to come up this week. All right, in the US stock market. So now let's take a quick glance through on the weekly performance. Why do I say very clearly the technology has started to outperform? So if you look at last week weekly performance chart of 14th of June to 18th of June, previously the technology was always at the middle to the bottom part of the table. So what you could see is that they are the only one that has a slight outperformance of 0.09%, a slight gain. The rest of it is all in the red, and most importantly, is the cyclicals, which is the energy, the industrial, the financial, the materials. All of them close negative 3%. And worse still is the financial negative 6% and the materials. So all these are actually their earlier outperformance has really started to suck out a bit of the wind because as you all know that in markets, what goes up, if it goes up too hard, too long, and too steep, and if the consensus is being skewed towards one aspect of a story that's too heavily weighted, this is where we may start to see this kind of potential unwinding very coming not very fast. Because if you look at the last couple of weeks over here, everyone is talking about that global reopening story. Then we talk about the reflationary play. We talk about commodity prices are getting higher and higher. We support energy stocks. We support material stocks. Then we're talking about definitely the industrial stock and the financial due to this yield curve that is steepening. All right, but unfortunately, this story has started to change after, in fact, prior to the Fed FOMC, the yield curve has really started to flatten slightly. Means the yield curve, I would not say flatten, the yield curve differential, that means the 10-year yield and the 2-year yield, the differential has started to come down. That means, i.e., the rate of increase in the 10-year is lesser than the rate of increase in the 2-year. Okay, so that's the cut story short. So in fact, prior to the Fed, this this observation has started to tick down. This is where we start to see financials actually start to do a bit of underperformance in the last 1 week or two or so. It's except that only the Fed FOMC last week reinforced this move. Okay, so that's how market moves. Yeah. So if we were to put this performance in the bigger picture, we talk about a rolling 1 month. Okay, what I mean by rolling 1 month, that means is running. Imagine like a running 20 days till 18th of June. That means this one is keep on running. That means the figures will keep on moving daily. It will keep on shifting. Okay, so it's a running 1 month performance as of last Friday. Okay, so information technology was the highest, 6.6%. Real estate 5%. Communication service also part of, I would say, is part of the information technology asset is split up slightly due to some regulatory improvements, I call it, because they actually put Facebook, Google in, pardon me, they put Facebook and Google into communication services, and as well as together with some of your gaming stocks like Activision Blizzard and Electronic Arts. All right. Then one that is performing the worst for the 1 month rolling till 18 June will be your cyclicals, your industrial, financial, materials. All right. Over here, energy is slightly better at negative 1.95%. All right. So, but however, the story now has started to tilt. So I will not be so aggressively bullish on that cyclical or value team play for this coming quarter, which is Q3. All right. So now let's take a look at the upcoming events, economic events, and notable company earnings announcement for this coming week, 21st of June to 25th of June. So bear in mind, all the time and date over here are Singapore time. So the one that's coming out will be definitely Fed Chair Powell testimony to Congress at 2 a.m. Wednesday time. So everybody will start to glued to his screen about, like I say again, I believe that more or less it will be the same story as the press conference. Usually he will not want to rock the boat, but nevertheless, most of the participants want to hear about what his view on the current inflationary situation, and also what is his willingness to actually maintain the current bond buying program, which is the QE, the quantitative easing program, which is 120 billion per month of bonds. How much more willing he wants to maintain that pace? Will he give any hints that when will it be start to temper? All right. So then this week will be PMI week, flash PMI data. That means preliminary PMI for the month of June, this month of June. So you have across the globe, you have Eurozone, UK, US, all giving out the preliminary June figure for both the services and manufacturing PMI. Then after of that, we definitely have this important inflationary data for US, the PCE price index for May. So this is actually is actually the barometer or the main consumer price index metrics that the Fed watches instead of the CPI. All right. Then it will be out at 8:30 p.m. on Friday, this coming Friday. Then for earnings wise, we have essential Q3 fiscal year 2021 Thursday before the market open. One of the popular meme stock right now, BlackBerry, on Thursday after the market close. Then you have FedEx and followed by Nike also Thursday after the market close. All right. So now let's get to the more exciting bits of it. The bit and pieces of this of my presentation will be the technical outlook of the various stock indices and the key levels to watch. Okay, so let me flip immediately to CMC platform. So let's start with the US indices first. So one of the US indices I share will be your this semiconductor ETF, which is one of the proxy of risk that I like to watch. So what we could see over here is that the semiconductor ETF last Friday actually plummeted back again, retesting this, I would say this is the 50, 100 day moving average, and also the previous swing high area of 6th of May, broken, turns into a pullback support at 44 to 360. Then definitely the key medium term support for this particular week will be at 392.50. We saw the 200-day moving average and as well as the bottom of this range that is in place since end of March. Okay, so it's a 3-month range support. So over here, so nothing pretty drastic to say that the trend has really changed. So it's more likely it's a sideways phase. So if the index managed to hold above 42360 for this coming week, it may slowly churn up upwards to form higher high, potentially targeting the first resistance at 458 level. All right, so RSI also no change, still holding above the key support level at 43 and 36% level. So nothing pretty scary on the US semiconductor ETF that indicate to us that we may start to see a major risk of event or even for the coming week. All right, so now let's go to the S&P. So S&P, right, most of you are pretty concerned, especially if you read certain reports that the S&P 500 has started to actually plummet below the 50-day MA. I mean, it closed below the 50-day MA on Friday, but and as well as also if you draw a descending channel support from the low of 23rd of March 2020, okay, from here, it also broken below. But bear in mind, don't forget over here is that Friday is a bit it's a bit exceptional because it's not your usual normal trading day, because that trading day coincide with a very big option expiry, which I shared with you earlier at the start of my presentation. So that could actually skew the technical picture. That means, i.e., that means the break of that 50-day moving average that was since supporting the index since 25th of March could be a fake breakout due to these high volatility event, which is the big option expiry that causes as unusual move on Friday, exceptionally, especially also reinforced by the hawkish statement from Fed officials, Bullard. Yeah, so that's why over here is that I was given this kind of scenario, and with the Nasdaq 100 still holding above the support level, it's very hard for me to actually validate a medium-term down move for the S&P 500 this week. That means we're talking about a 1 to 3 weeks of decline. All right, so for with that in my picture, I will rather turn actually neutral for now between the level of 4110 and 4248. Okay, 4248, taking into account of the last swing high of 3rd of Feb, or the last swing high of 10th of May. Okay, that's because that's a failure breakout and it came down. All right, came down after it break below this 42440 over here, which was actually the day of the Federal FOMC announcement. Okay, so it could be a psychological level as well, given the steep fall as well. That this steep fall occurs right to the prior swing high of 10th of May that did not have a proper bullish breakout prior to the FOMC meeting. So 4240 will be my upper boundary, and 4110 will be my lower boundary. So what we are seeing over here is that I will be more neutral between these two range and looking for potential we call it more substantial bounce when it hit the 4050 level. So what's 4050 level is actually the range, it will be the range bottom area of 4050. So 4050 over here is that it could be, if I could go to the daily chart over here, you see this range over here. What is 4040, right? 4050. So 4050, if I were to do a Fibo retracement, taking from the low, okay, of 4th of March, project it up. So it's actually the 38.2% Fibo retracement from here. Okay, so I will be neutral, 4240 and 4110 level. So between these two range itself. And also, if you look at the RSI on the 4 hour, it already started to actually inch up from the extreme oversold level. All right, so neutral between these two range for now. Okay, on the S&P 500. So like I said earlier, why I'm hesitant to turn bearish on the SPX 500 is because of the bullish nature of the Nasdaq 100. All right, so if you look at the Nasdaq 100 over here, it's still bullish. And still remember that we have the 1440 upside trigger level. Last week, it actually broke up above it. And now it's actually back to retest this 4040 level again. All right, so if you look at the price movement of the daily chart on the Nasdaq 100, it's still shipping higher high, higher low, and holding above the 50-day moving average, which is at 13,700. RSI also pretty bullish on the daily chart over here, indicating to us that it's still this medium term upside momentum still remains pretty much intact, holding above the key support of 50 level. Okay, the 50% level at this moment in time. So given the rather more bullish configuration seen in the Nasdaq 100 over to the SPX 500. So that's giving the reason why over the SPX 500, I rather turn neutral first rather than outright bearish. All right. So for the key strategy or the strategy chart for this coming week, so still unchanged. This Nasdaq 100, ever since the low of 13th of May, is still going to evolve within this bullish ascending channel, a minor ascending channel ever since there's this retest of this inverse head and shoulder bullish breakout neckline resistance turns into a pullback support over here. So using 13,700, which is the 50-day moving average, as my key medium-term pivotal support level, unchanged. Still looking for a push up to test the next resistance at 1428. Then thereafter, the upper boundary of this minor ascending channel. Also a confluence of Fibo expansion level at this 14,280 mark or resistance over here. All right. So what we could see over here is that the RSI is still bullish or over at the still shaping positive configuration on the 4-hour RSI, shaping a higher low. All right, over here. So if we could draw the support level, okay, it's still holding above the support line. All right, for the Nasdaq 100. So overall, if you look at it over here, it's a very clear kind of ongoing outperformance that is unfolding for the tech space in US. Okay, which is, as you all know, that Nasdaq 100 is actually heavily weighted towards the technology stocks. Okay, now, going on to the Asia will be Hong Kong 50 or the Hang Seng Index. So Hang Seng Index pretty much unchanged. It's still trying to actually shape this kind of basing configuration, or I would say sideways configuration, holding above the key medium-term pivotal support we have for the last three to 4 weeks or so at 28,000 slash 27,600 level. So now it's coming back to the bottom of this basing formation. So I cannot turn outright bearish because it's still holding above the basing formation support at 28,000 slash 27,600. So with that in mind, right, potentially we could see this week for a potential push up to test that upside trigger level, which is the neckline resistance of this basing formation that is in place since March low, which is about 3 months plus for now, which is at 29,575. All right, so unless it could break above 29,575, then we could clearly see more substantial or more pronounced potential upside movement for now. So till then, still expect this kind of potential basing to take place. I mean, more like a sideways configuration. So now it's at the bottom of the base, which is support. So right now, potentially we could see a push up to the top of the base, which is the range top or the upside trigger level at 29,575, as long as this 28,000 slash 27,600 key medium term pivotal support holds for that. All right. So now going on to Japan. Yeah. So this Japan over here, like I explained earlier on, yes, today it actually is the worst performing Asia stock market that we monitor, down by close to negative 3.3%. So like I said earlier, why based on 1 day of price action we cannot actually validate a substantial down move because of this level here at 27,500. So what's 27,500 is actually a key support level in terms of graphical, which is the previous swing low of 29th of January. Mathematical is the 200-day moving average, and based on FIBO, is actually the 23.6% FIBO retracement, give or take, since the start of this major uptrend. That is still taking the start of this major uptrend from 16th of March low last year. Right, so this is a 23% FIBO retracement. Okay. So with such technical elements still in place, all confluencing to the 27,500 level, and given that this level has not been clearly taken out on the downside, we could actually say that today's down movement could be related to noise as well. All right, and also if you look at the hourly, the daily RSI is now coming back to the oversold region again. All right. So with that in mind over here is that I will actually be more neutral between 28,500. So this was actually today's level, the break of this level that caused this sharp intraday down move. Neutral between this level first, 28,500 and 27,300 or 27 slash 27,500. Okay, taking the swing low of 13th of May. All right. And what's interesting over here is that the 4-hour RSI has started to bounce from a extreme oversold level and at this 15%, okay, 15% mark level over here. So given that this could be a kind of a noisy intraday move or fake sell-off move to shake up certain short-term holders, so I'll be more neutral between 28,500 and 27,300. So unless we start to see a 4-hour close back above 28,500, then we could see a push up again to actually retest the upper the bound the what you call it, the descending trendline resistance that is still in place since 16th of Feb 2021 high, all right, at 29,600. So if this level starts to break down, yes, as a 4-hour breakdown below 27,400. So what it means that it could actually take us down much lower to the next support at 26,200 slash 25,900, which also the lower boundary. So what we could see that it could be since the 16th of Feb 2021 high of 13,716, is also a 31-year high. Since this high over here, it has been in a sideway formation. So this sideway could actually take in the form of a expanding wedge. All right, expanding wedge, which is the lower boundary of the wedge, coming in at 26,200, 25,900. So unless we start to see a 4-hour close below this 27,300, that validate this down move. So for now, still remains neutral, 28,500 and 27,300 due to the earlier elements that I share with you on the daily chart. Okay, now moving on to the German DAX. So for the German DAX over here is that go to the daily chart. So over the daily chart over here, what we could see is that previously there was a support level that I have last week about 15,400 slash 15,300. The kind of a key medium term pivotal support to maintain a further potential push up. So in today's Asia session also it actually collapsed because but bear in mind in terms of the Asia session of the German 30 index, it's very liquidly traded in terms of liquidity is thin because the actual the futures market is only open at 2 p.m. the German future market, which is right now. Okay, then we start to see more volatility coming in. Okay, at the early start of the European hours. So this morning push down, right, early session could be also noise as well at below this 15,400 level. So what we could see over here is that the RSI did have a decisive break below the key support level that is holding at 42% level. So this give me a kind of reason to actually be more hesitant to actually say that, hey, right now potentially we could see a potential down move to test 14,800 level, which was the swing low of 13th of May, 4th of May, and as well as the ascending channel support of this major channel that is in place since 19th of March 2020 low. All right, so I will not be so hesitant to actually turn bearish from a weekly perspective towards 14,800. Instead, I will actually tolerate the excess on the 4-hour chart and consider that as a bit of noise, a bit of noisy movement. That what we see at this 14,400 level. Okay, so I will tolerate a bit of noise. So actually, what is this level over here? If I were to actually draw a Fibo retracement, okay, this 15,200. So if I were to draw a Fibo retracement for you all to see, okay, taking from the low, which is the start of this minor ascending channel, first of Feb, push it up here to the high is at 23%. 23% over here. Then if we take it from this low, the 13th of May low, you're able to see a confluence at the 61.8%. Okay, 61.8% from the low of 13th of May, but taken from the low of 1st of Feb is at 23.6%. So a confluence of Fibo retracement cluster level that is coming in at this 15,200 level mark. All right, so I will actually tolerate the access to 15,200. So that was my key medium term pivotal support I have for this week. So as long as it doesn't have a 4-hour close below 15,200, potentially you could see a chance for it to shape higher high again. But to reinforce this start of a new impulsive up move to make it to see higher high or new fresh all-time high, it got to break above 15,510. That means a 4-hour close above 15,510, which was actually the former support level. And today's Asia is actually broken, now turns to a pullback into a resistance at 15,510 for us to actually be more confident to actually validate the start of a new impulsive up move to see higher high and a potential fresh all-time high. So the next resistance to watch will be at 16,070 slash 16,200, which is defined by a confluence of Fibo expansion level. And also, if you look at the RSI, the 4-hour RSI also is coming at the extreme oversold level as well. So this is the most oversold level since this minor uptrend started on 1st of Feb. All right. So with that in mind over here is that overall, what we could see last week movement on the stock market, on the global stock market, and also that sell off on the US stock market on Friday is kind of a accelerated move, especially on last Friday due to the big option expiry in the US stock market. So I will be still hesitant to actually validate the kind of a start of a medium term downtrend for the major stock indices. One of the reasons holding that because the Nasdaq 100 is still relatively positive in terms of its technical configuration as seen on the daily chart and the 4-hour chart. So with that, I'll be more neutral on the S&P 500, neutral on the Japan 225, which is the Nikkei 225, tolerate the excess for the German 30 index to 15,200. And for the Hong Kong 50, the Hang Seng index still looking for it to potentially push up to its potential ongoing 3-month base basing resistance. All right. So with that, let me share with you in our CMC different channel that you can follow us to keep yourself updated on the latest market news or happenings, what happening in the market. So you can actually follow me. This is my Twitter handle. So just Twitter is very simple. Just open up Twitter. It's for free. Register it. So once you into Twitter, you just find at Kelvin SC Wong. You type at Kelvin SC Wong and follow me, and you on the notification. So once I send out new tweaks throughout the day. Like today, I sent out this chart of the week for gold because gold, yes, even though it plummeted, it actually tests a key medium-term pivotal support zone right now where we could see a potential short-term bounce. So that's my chart of the week for gold. The reason why, so follow me, you click on the link and you read out, I'll explain to you all the reason why. So it's a bit of educational value as well. Then last month, I also tweet every day, frequently at the start of the market. What do I see in the market, that especially on this? Why do I say that it's not a sell-off yet? Because one of the risk proxy, which is high yield bonds, junk bonds, actually performed exceptionally well last week. Okay, you can actually take a look at it. All right, so just follow me on Twitter and on your notification. Okay, then you will receive we call it updated tweaks on the markets from myself. All right, then definitely you also have come to our channel. Okay, so this video will all be published to CMC Singapore YouTube channel. Okay, so find it, subscribe it. Yeah, all right. Then from there, you're able to see once there's new video being uploaded, it will actually hit on your mobile devices, okay, or on your laptop, or on your mobile pad as well. So what I could see is that it has various playlists. So for those who wants to find out more about the playlist for education, so you have this market outlook. Okay, then you have over here getting started in trading. So you click on it over here, you see a list of here trade the markets like a pro. So this is me. All right. So I've come up with a series of module, 1 to 9 at the moment. It's still ongoing, to 10, 11, and 12 on how to, it's called trade the market like a pro. So I will actually explain to you all how to use technical analysis to trade and how to combine various technical elements like trend indicator, graphical analysis, together with risk management to actually formulate a trading strategy. So do actually follow us on our social media channel because there's lots of content over there. All right. So with that, thank you for your time in to actually listening to my video, and I hope that you have a great trading week ahead this week. And I see you again in my next video.